So we have a new law that got enacted, and I want to kind of talk about what it is and what it isn't and what it might mean for the housing industry, because it will be very big in our industry for mortgages. So the media is already calling this the Housing Affordability Act, which, yes, within the law there's one tiny subset of it that is called the Housing Affordability Act, when in reality the new law is called the 21st Century Road to Housing Act. And it is important to make sure you understand that's what it's called and not the Housing Affordability Act, because we're going to talk about what it actually is. And it's not truly created, unfortunately, strictly for housing affordability. So really what the new law targets is increased inventory. So within the new law, just to summarize it, it's essentially removing some of the red tape and allowing houses to be built faster. Now, when I say faster, I don't mean the timeline it takes to build a house or cheaper. I don't mean that kind of faster. I mean essentially less red tape, more incentivizing to have new inventory in the market. Many areas of the United States are struggling with a housing inventory issue, which is making it very difficult for new buyers and first-time home buyers to acquire homes. The law also encourages other types of homes being built, especially manufactured homes. And you may feel a certain way about manufactured homes. However, when we talk about price points, manufactured homes typically are the lower price point homes available. However, I warn everyone as a mortgage lender, just because the price point is lower on a manufactured home does not mean the mortgage is going to be significantly lower, because interest rates are still higher on manufactured homes, and insurance for your homeowner's insurance can be significantly higher on manufactured homes. However, from a sheer affordability of price point, manufactured homes can be helpful, especially when we're up against now a national average of $434,000 for a home, and even considered a starter home technically. So manufactured homes will likely be seen more and more. They're also encouraging building of what we call accessory dwelling units, what the public typically refers to as mother-in-law suites. So building of homes, or being able to build onto homes to have these accessory units that can be for a loved one to live in or to use as rentals. The other largest piece of this law is pertaining to investors and trying to limit the amount of investment properties they can obtain. Now, I've seen a lot of people talk about this, and I've seen it on TikTok and over Instagram, people thinking that means your average investor is going to have more difficulty obtaining a home. No. The bill was specifically for larger corporations who have thousands, some of them, investment properties. So this is now specifically targeting corporations, or technically an individual, who has 350 or more investment properties. So the landlord owning your entire block of townhouses, that's still gonna be allowed. An individual who's got 3 or 4 duplexes in Charleston, absolutely still allowed. People buying properties and using them as short-term rentals, absolutely allowed. What it could stop potentially, though, are these larger corporations purchasing entire neighborhoods or entire blocks that are the only affordable housing options for first-time home buyers. So we've said what the bill does, right? It will increase inventory potentially of homes over the next 3 to 5 years, though. We're not going to wake up tomorrow and see a change in inventory, but it should increase inventory over the next 3 to 5 years. It should increase potentially other styles of homes being built that may be more affordable, and it should hopefully limit large-scale investors from continuing to take up all of the affordable housing. Let's talk about what it doesn't do, though. So there have been misconceptions about the new law. Number one is that it's going to affect interest rates. It has zero effect on interest rates. It's just about inventory. Unfortunately, there is still nothing in the horizon that will dramatically change interest rates. We do expect interest rates to stay about where they are, which is a 6.5 or slightly above, depending on what day you're watching this, for the remainder of this year and potentially even into next year. And that's why I say we really can't call it the Housing Affordability Act, because that's where the affordability piece is tied into as well, this price point and mortgage rates. So for some of us, we need inventory. For others, we really just need a break in the rates. So unfortunately, the new law doesn't address that. The other thing I've heard people say is that it had a grant for first-time home buyers associated with it. That did not make it through any of the law or act. It does not include any grants or funds or money given to any buyers. So that is an unfortunate myth. And the third thing I hear a lot is, oh, well, it's going to cause housing values to crash. No, It really shouldn't. The only time we may see this affect value is not necessarily value getting lower, but staying more stagnant. Because if your home is worth X amount and there's 10 other homes just like yours now right around the block, you're not going to gain equity as fast because those are brand new homes. So we may see in those areas where we do see more inventory, especially they're going to be newer homes typically, we may see the values not rise as quickly as maybe they had historically. But overall, the bill, the law, the act is really meant to help us get more inventory out on the market, which can definitely help buyers have more options, which keeps us in more of a buyer's market, which is a good thing, which will hopefully contain the pricing issues that we're having. Although, you know, as a mortgage lender, as a girl mather, there is not a ton of great options out there when our average home price is $430,000 at a 6% or above rate. So that's why on the lending side, we continue to utilize anything we can, temporary interest rate buy downs, down payment assistance programs, lower local programs with better rates, anything we can to help buyers. But if you have any questions about the new law, let me know.